All right, recording started. Good morning, everyone. All right, so before we go ahead, any questions? So, till the remaining people join, we can just at least do the question answer session. Long put is bearish. What does long put give you? Long put gives you the right to sell, right? Put. Yes, Omkar, you were supposed to finish your quiz. Uh, Quiz 3, slide 6 and 7. All right, let's take a quick look. Of course, Shashank, we are going to discuss that. Yes, Arun, what is the issue here? If implied volatility is low relative to the historic volatility, you are a dash of puts at supply. A buyer of a put option. So, Arun, what was your doubt here? What is irrespective of zone, Rahul? What do you mean by that? Is it day 3 or day 4? Day 3, right? We are buyer of puts at supply only, Rahul. Remember that. The question is, if IV is low relative to HV, you are a dash of puts at supply. You are a buyer of puts. If this was demand, this would be calls at demand. This is quiz 3. Day 3 quiz, right? Or third quiz? Day 3 or day 4? If it is related to theta, it has to be day 3. Day 4. Correct, Pudupet. Buyer of puts means bearish. The theta of an at the money option dash as expiration approaches. Why did you put decreases? Tell me the rationale behind it. Oh, then do it as per rhombus. If you see, let me just open yesterday's sheet. IB, and I only know IB. I don't remember where is yesterday's book. Okay, let me check. No, Omkar. They don't require high capital. All right. Okay. All right. Check this. Okay. Arun, you know. Okay, let's go here as well. Okay. Do you see this graph, Arun? What does this graph tell you? That time value is higher when there is more time for expiration, and time value is lower when there is less time for expiration. But who is responsible for reducing this time value? Theta. So isn't it that when more time value, lesser theta, and lesser time value, more theta? I mean, lesser time to expiry, more theta. So that means as expiration approaches, the theta is going to increase to reduce the time value component. So the rhombus also says the same thing. Theta is going to be more here. Don't look at the rhombus length here. It is not the rhombus length. You see this. This is what the yellow part is what will tell you. If you are a buyer of options, Omkar, if you are a seller of options, theta values are going to be positive. Sushila, what do you mean I did not get this? Okay, simple. What is time value? Isn't time value expectation of people? What people are expecting the underlying is going to do in the near future. Now, let's say, Sushila, tell me what do you think Nifty is going to do in the next 3 months? Okay, let's see. Just take a assumption based on your thought process or your knowledge. Where will Nifty be in 3 months' time? Okay, Sushila says 12,000. So that's your expectation that when Nifty is trading at 10,735, you are expecting in the next 3 months Nifty is going to go to 12,000. All right. Now, let me ask you a simple thing. What is the probability of Nifty achieving that in February, March, April, May? Where is the probability the highest? Yeah, more time, more chance for the event to occur. So let's say your event is Nifty reaching 12,000. All right, Sushila? Okay, more time for, so your expectations are higher that it will become in May, right? And lower that it will become in March, correct? So when expectations are higher, the time value component is higher. When expectations are lower, the time value component is lower. Now, we know one basic inherent property of the options premium is that the time value will always become zero at expiry, isn't it? Correct? Then who is responsible for making time value zero? Theta. Arun, just hold on to your question right now. You don't type anything. Let me explain to Sushila. Okay? Theta is responsible for making time value zero. That's the primary job of theta. So as we are approaching expiry, shouldn't our time value start reducing? सिंपल है. एग्जाम को 2 महीना है और आपको 10 चैप्टर करने हैं. 60 दिन में 10 चैप्टर करने हैं. तो ऑन एन एवरेज आप 6 दिन में एक चैप्टर खत्म करोगे तो पहुंच जाओगे एग्जाम तक. सारे 10 चैप्टर खत्म हो जाएंगे. नाउ लेट्स से you have only 15 days to complete 10 chapters. Now how many days you will need? So you have to work more, right? So now if you have to complete the same syllabus in 15 days instead of 60 days, you'll have to work harder, right? And more. So that's how theta will have to work harder for the time value to reduce. Remember, time value does not get affected only because of theta. Time value can go up because of delta. Time value can go up because of rho, vega, all that. So imagine 10 days to expiry and the volatility shoots up. Volatility shoots up. Is it going to increase the time value component? Because volatility affects only the time value component, isn't it? It's only expectation. So if the time value gets bloated and so imagine आपको 10 दिन में खत्म करना है सब कुछ तो एवरीडे ज्यादा करना पड़ेगा कि नहीं 60 दिन में 10,000 रुपया खत्म करना और 10 दिन में 10,000 रुपया खत्म करना पर डे ज्यादा कब होगा 10 दिन में करेक्ट so isn't it that means every day you have to spend more that is 1,000 rupees when you had 10 days. So that is what is theta. Theta will keep on increasing as we come closer to expiry. The theta value 15 days to expiry is going to be more than the theta value 1 month to expiry. The theta value of 1 month to expiry will be more than theta value of 2 months to expiry. The theta value of 1 month is going to be much more than the theta value for 3 months to expiry. So as the as expiry time to expiry reduces, theta value will start. So theta is like कुंभकर्ण, सो रहा है, जितना ज्यादा टाइम है वो सोता रहेगा, पर जैसे नजदीक आ गया वो उठ के ज्यादा काम करते लगेगा. Arun, now you can ask me your question. Okay, 16 and 17 of day 4 quiz. Okay, now this is simple. Mr. Suresh, this is simple and straightforward. Now your XYZ June 115 call is trading at 7 rupees. So the premium is 7 rupees. The delta is 0.5, theta 0.05, vega zero point 0.6 and rho 0.3. The stock goes up 1 point. What is the new value of your option? Who tells us the directional rise? Why 8? Mr. Suresh, the stock going up 1 rupee will not change the premium by 1 rupee. The premium will change by the value of delta. Remember. What does delta tell you? Delta tells you how much my option will change for a rupee rise in your underlying. अरे अरुण क्या कर रहे हो यार? Can't you see theta is triple plus when closer to expiry, front month expiry, and theta has no power when it is far month. This is the front month expiry. See how many plus theta has. Isn't it the highest? Now as time passes, this plus sign will keep on increasing. Right now there is enough time, that's why there is no plus sign here. But as we approach expiry, let's say we're talking about this expiry. As we approach this expiry, this will start increasing and the volatility impact will start reducing. Got it, Arun? Don't just say, okay, sir. I want to know whether you've understood or no. Because if you can you hear me now? Yeah. So Arun, is it fine now, or you still have any questions? You have one more question. Okay. The theta value at far month is lesser compared to the theta value in the front month. Yesterday, didn't I show you those examples in options oracle? See this, right? The Feb theta is higher than the April theta for the same strike. So as we come closer to expiry, the theta value will increase, and we go farther from we are far from expiry, the theta value reduces. Whereas Vega is more in far month and less in front month. Remember, Vega and theta are exactly opposite. And Vega and theta are actually inversely correlated. But as we approach expiry, right, theta will start working more and more harder because it has to do a lot of work. The rhombus is nothing but it tells you in a graphical way, Rajiv, how does Vega and theta affect with respect to expiry and moneyness. This is moneyness, this is expiry. So if you look at Vega, right, Vega is highest for at the money options, and as you go out of the money or in the money, the Vega reduces. Okay, and Vega will be more for far month compared to front month. That's why we have 3 pluses. That shows higher power. Whereas theta is more in the front month and less in the far month. Got it? It's just a graphical. Whatever was there in the slides, I have put it in a graphical representation for you to understand it very easily. Please repeat the calculation part of Greeks which are in slide 9 to 16. Please repeat. Okay. Now, Mr. Suresh, what when a stock goes up, the option premium will be affected. Call option premium. Correct? By 0.5. So when stock rises 1 point, your new value will be 7 plus 0.5. Got it now? Arun? Implied volatility falls. So how is implied volatility correlated or Vega correlated with this? IV goes up, option premium will go up or come down. IV goes up, option premium goes up. IV comes down, option premium comes down. By how much does it come down? By the value of Vega. So here it is going to be 7 minus 0.6. 0.05 is theta. 0.60, yeah, not 0.06. Now is this clear? Interest rate rises 1 point. If interest, how are interest rates correlated? Positively for bullish positions, right? So call option is a bullish position. So this is going to be 7 plus 0.3. 5 days pass. So when we say 5 days pass, that means everything else is remaining constant. Only 5 days pass. So this is 7 minus 5 into 0.05. Each day it is going to reduce by 5 paise. So 5 days means 25 paise. So it is 7 minus 25 paise. Suresh, is this clear? And the last two things, no, it's absolute value, Karanjit. These are all absolute value. Yeah, this is an example, ओमकार. तू यूएस में बैठे और ऐसा सब सवाल पूछता है. एग्जाम्पल है भाई. तुमको दिखाओ क्या मैं फिर. पहला दिन 5 पैसा, दूसरा दिन 6 पैसा, तीसरा दिन 8 पैसा, चौथा दिन 10 पैसा, पांचवा दिन 15 पैसा. Yes, that is how it is. But this is just an example for simple math purpose. And the last question is, stock rises 1 point. So एक स्टॉक ऊपर जाने की वजह से, डेल्टा की वजह से ऊपर जाएगा, और इंटरेस्ट रेट भी ऊपर जाएगा, तो both are happening at the same time. So it is a cumulative effect. Perfect, Suresh. All right. Everybody got this? Anybody still has any questions? And this is how practically it happens. Dumb question, does delta value contribute anything? Yes. So delta, essentially delta will contribute to time value itself, but as the underlying starts becoming in the money, more and more value, excuse me, sorry, more and more value will now get transferred to the intrinsic value. Definitely time value will affect delta. Delta will affect time value. So all the Greeks will only be affecting time value, but as underlying starts, so as a strike becomes in the money, intrinsic value will start getting added. When intrinsic value starts getting bloated, time value automatically starts getting reduced, because the probability of a surprise is happening. The surprise is happening, so more value will get added into the time value, the intrinsic value, and time value will not have too much of an impact now. They will automatically start reducing. And once delta becomes 1, it will simply keep on increasing the intrinsic value. Correct, Suresh. As day passes, irrespective of whatever the price of the option is, it will reduce every day by the value of theta. Just looking at the pre-open. Sir, theta at the money will decrease. No, why will it decrease? Vega will decrease, theta will always increase. Remember, theta's job is to reduce time value. And then time value component. Now, Ramesh ji, time value, let's say 20 रुपया है. Okay. Correct, Chandrasekhar ji. This is the example that I gave you yesterday, right? Theta value. So, Ramesh ji, आपका थीटा 20, आपका टाइम वैल्यू 20 रुपया है. Now you have 10 days to expiry. What is, if you say every day it will equally reduce, so what is the minimum value of theta that will reduce the time value every day? 2 rupees with 10 days remaining. Now let's say 5 days remaining and the theta value is still 20, the time value is still 20. Now what will be the value of theta every single day? So isn't theta increasing as we are approaching expiry? Because it has to do more work, right? That's why theta will always increase as we approach expiry and time value will reduce. Yes. So theta is all dependent on time to expiry, remember. Got it? Is this clear to everyone? Now, okay, let me just quickly check what is Nifty is opening up 8 points, Bank Nifty around 40 points. All right, perfect. Any other doubt? SW, what is SW? What is sideways? Nifty? पता नहीं निफ्टी ट्रेंड तो डाउन था अभी साइडवेज हो गया है इंटर स्मॉल टाइम फ्रेम में. Now this is also simple, right? Everything has to be done in together. Stock rises 1 point means 7 plus 0.5 and implied volatility falls down. So this is going to be 7 plus 0.5 minus 0.6. Simple. No, no, 6.9 is correct, Rahul. Any other question, guys? So today PSU banks are rallying. Allahabad Bank up 10%, Andhra Bank 8%, PNB 7%, Syndicate Bank 5, Union Bank 5, Bank of India 4, Canara Bank 3, Orient Bank 2. Recapitalization news. What is this, Mr. Suresh? Alright, so second 5 days pass, 5 into my. Correct, Suresh, absolutely right. So Ashish, what is Vega? Vega is people's expectation volatility expect as people's expectation change, implied volatility also will keep on changing. So the changes in implied volatility will have a higher impact on far month options compared to the near month options. Why? Because there is more time for that expectation to occur, to become true. And in the front month, the time is less. That's why the time, since the time is less, the impact of Vega changes is going to be volatility changes is going to be less. All right, perfect. So everything is clear in the quiz, or any doubts, whatever you understood yesterday. All right, no problem. Okay. Now, should we do one thing? It's 9:15 nearly. Should we take a 10 minutes break, 15 minutes break now so that we can manage our positions and then come back at 9:30 and start our class? All right. Okay. So let's don't log off. Just be there. 15 minutes will be back. We don't trade intraday options, Shrikant. Options are not an intraday tool. All right. See you guys in 15. Go ahead. Mr. Suresh, Ramesh, Arun, Pudupet, Sushila, Shiba, Chandrasekhar. No questions? Okay, welcome back everyone. Can you please confirm if you can hear my voice and see my screen? All right. So any other questions or we're good to go? Go ahead. Mr. Suresh, Ramesh, Arun, Pudupet, Sushila, Shiba, Chandrasekhar. No questions? All right. All right. Let's begin with taking action. The proper use of option provides a tremendous edge in the marketplace. The option trader needs to make sure that when using options with online trading academy's core strategy, that key strategic parameters are met and that the options methodology is applied properly. And this checklist is designed to make sure that the options are used properly. So it is like the step-by-step process that you have to keep following. Now, I want all of you to just read these steps. Please go through these steps. Did all of you read the steps? So what do these steps tell you? Yeah, I'll come to AOB and AOA. Yeah. Yeah, perfect. So the first step in any options trading involves identifying a stock trading with the underlying. There has to be an opportunity in the underlying. Then only you can trade options. If there is no opportunity in the underlying, you cannot trade options. Remember this. Okay. So first is do your entire six-step course strategy process and figure out what is the kind of um, trade setup we have: bullish, bearish, non-directional, whatever is that. Then you will check the liquidity using options chain. Now I'm going to teach you this today. This is what we will be learning the checking liquidity using options chain. And this is simple, and I'll be giving you a list of stocks which qualify with all these parameters. Remember that. Okay, I'm going to give you those list of scripts. Yeah, so all that you have to do, Arun. Core strategy part. This is what you have to do. To come to this entry, stop, target, and everything, you have to do whatever has been taught to you in core strategy. Once the liquidity is checked, you will have to check the volatility. Compare the volatility to, now this is the volatility. So this is core strategy. This is volatility analysis. Now, how do we do volatility analysis? The IV tool. No, the IV tool. The IV, we have to figure out which zone it belongs to. Is volatility in zone 1, zone 2, zone 3, zone 4, or zone 5? So that will help us identify the most appropriate options trade for our setup. Okay. So once you choose the strategy, these are some of the rules. And then finally determine your reward to risk. Now remember, the reward to risk determination is not like what you see in core strategy, like entry stop target line laga diya ho gaya. It is not like that. There is a calculation for that, and which we are going to learn tomorrow morning. Core strategy in review. We use options as a substitute for script, therefore we need a complete trade plan based on OTA's core strategy. So the OTA's core strategy will give us this basic thing. Three elements: stop, entry, target. So what it gives you is what is the action that you're going to do, buy or sell, and then what is the trade parameters like entry, stop, target, and position size. This is what you get from the core strategies. Everybody okay with this? Simple. Now let's get into some more terminologies. Liquidity. What is liquidity? It's nothing but a market with large quantities of ready and willing buyers and sellers. So what is the advantage of having more liquidity? What's the advantage of having more liquidity? Your fills will be with lesser spreads, right? Getting in and getting out is not going to really cost you much, isn't it? Not easy to find trades, Prasanna. Easy to enter and exit without costing too much. Alright? So you need an options market which is liquid so that you don't pay for the spread unnecessarily. Slippage. Does everybody know what a slippage is? It's nothing but the difference between what you planned as the entry point and what is the actual entry point. Spread is nothing but when you put an order, right, Deepa, you are bidding and somebody wants to sell, is going to offer. The difference between the bid and the ask or bid and the offer is what is called a spread. So the difference between bid and ask is what is called a spread. Okay. So the difference between estimated transaction cost and the amount actually paid is what is called as the slippage. Let's say you thought you will buy at 22.30, but you get the entry at 22.60. So 30 paise is the slippage. HDFC Bank. The okay, let's not take HDFC Bank. Okay, now if you see this, okay, the bid is 94.65 and the ask is 95.5. That's 50 paise spread. The spread is the difference between these. What is highest and lowest ask? Is that you don't look like this puduped. You have to look like this. What somebody wants to buy at and what somebody wants to sell at. The difference is what is called a spread. Not every option is tradable, remember that. Okay, so we have about 160. Yeah, so the best rate put to pay, whoever is first in the queue, that is going to be your spread. Not every option is tradable based on liquidity. If liquidity is low, liquidity is nothing but volume, by the way. Okay, if liquidity is low, the chances of slippages are very high and the cost of entering the trade is very high because of wide spreads. Okay, is that clear? Correct. So parameters, what are the different parameters? How do we assess liquidity in us? How do we take care of this part in our stocks trading? Core strategy, how do we take care of this? 5 lakh plus, correct. So the criteria is minimum 5 lakhs, average daily volume, correct. So here similarly we'll have different parameters to assess liquidity. So the first is okay, one moment. The first one is open interest, amount of active contracts. Okay, the first one is open interest, amount of active contracts. That tells you the past activity. Amount of active contract means जो लोग ट्रेड पोजीशन ले चुके हैं. Is that clear? What is open interest? So let's say all of you buy one call option of Nifty. All of you. That's 55 people here will buy one lot of Nifty. That means what is going to be my open interest? 55 lots or 55 into 75 shares. If you look at it in terms of shares. If you look at it in terms of lots, it is going to be 55 lots. Correct? That, and this is right from the beginning. Whenever since the contracts were open for trading, whenever people started buying, selling, whatever, and their open interest is the active contracts that are still people are having positions in the market. Volume tells you the contracts traded today. That is the current activity. How many contracts got traded today? So let's take a look at Nifty here. Okay. So if you see the open interest, this is the open interest. Now when you look at the NSE chain, everybody knows how to go to the NSE chain. When you go to nseindia.com, you go to live market and then equity derivatives. Nizamuddin. Live market and equity derivatives in nseindia.com. So this is where you have all the indices which are traded in options. So Nifty, Nifty IT, Bank Nifty and Nifty Mid Cap 50. These are the ones that are traded. And this is where if you want to look for an option chain for any particular script, you put it here. And this is the expiry selection that you're going to do. And this is the whatever you've chosen, the current market price is here. All right, so let's take Reliance. Okay, now this is the open interest that you see, the first column. This is so the option chain is divided into two parts. The center is all the strike prices that the exchange has released for that particular script. Okay, so if you see here, Reliance has strike prices at every 20 rupees interval. Reliance has strike prices at every 20 rupees interval. Did you see this? All right. The left side is all call options. The right side is all put options. The left side is all call option. It's written here. Let me just zoom in a little bit. Calls, and this is where the puts are. You don't need to see the chart. We never look at options chart, remember. Okay. So what you see here is open interest. Now the only thing is the open interest that is given here is in terms of number of shares. The open interest is in terms of number of shares. Please note that. All right. So if let's say, and now one more thing for you to make it easy to understand what is in the money, at the money, and out of the money. You see these yellow shaded parts? They are all in the money options. So this is in the money call option. This is in the money put option. All right. And the white parts are out of the money. And the part where the white and this ends, that is what is the at the money option. So if you see the current market price is 1236, the closest strike is 1240. Now that is the at the money option. So one of them will be slightly out of the money, one of them will be slightly in the money. So here, what is in the money, the put or the call? The put, absolutely correct. And the call is out of the money. Is this clear? Another way to understand what is in the money and what is out of the money. Then here we have OI. OI is in terms of number of shares. Now if you see 1240, that's where the how put, how do you define Ramesh in the money and out of the money? Arey Ramesh, how do you define? My question is, how do you define that? Hey, anything you talk, Ramesh ji. Homework करते हो कि नहीं? Do you go through the manual or no? Yeah. So if I talk about 1250 call put option, what is intrinsic value? Don't say IV, say intrinsic value. So when you look at 1240 strike, okay, the current market is 1236. What does 1240 put give you? Ramesh ji, what does 1240 give you? What does it give you means, I mean, so do you know that 1240 put is in the money here? Or do you have any doubts about that? No doubts, right? Okay, fine. Then why are we discussing this? All right. So put is slightly in the money and call is slightly out of the money. Now the OI is in terms of number of shares. Now NSE website has put this in different ways. The OI and the change in OI is always in terms of number of shares and the volume is in terms of number of contracts. Please remember, the OI is in terms of number of shares and the volume is in terms of number of contracts. So if you look at the at the money strike, how many are these? The OI, Bhavya, the OI and change in OI is in terms of number of shares, whereas volume is in terms of number of contracts. So Reliance, each contract is worth 500 shares. So you divide 1245000 by 500 to get the number of contracts. So 12,45,000, you divide this by 500, you get 2490. So that is the open interest. That is, that many contracts are open in the current market for 1240 strike call option. Is that clear? Why will it be relevant? So when you're choosing your strikes, right, the liquidity criteria has to be checked. Yeah, change in OI is next, Chandrasekhar. Yes, Surajji, this is one of the most liquid scripts. Got it? Now, if you see 49,500 is how much? आप देख लो मनीष भाई. You can see it yourself if you have liquidity. We do not in FAR month. So this divided by 500. So which means by now 99 contracts have been already traded in Reliance. Today. No, this is what has happened today. And this is today's activity. So today if you see, and volume is in terms of number of contracts. So number of contracts means 1144 contracts have been traded today. Yeah, so this is a little bit delayed. If you see, it will change. It will keep on changing. Look at that. Did it increase? This is 5-10 minutes delayed. That's it. Okay. So this is a number of shares, number of contracts. Now this is nothing but this is the implied volatility. Yeah, open interest is right from the beginning of the contracts. Whenever these contracts started trading, it could be last month, it could be 2 months back. Whenever this contract started trading, people started trading. That since then, this is the open interest. Now, this IV is not intrinsic value. This is implied volatility. Remember. Implied volatility. Yeah, bid quantity and ask quantity is in terms of number of shares. Manish, it is not Vega. It is implied volatility. Vega tells you how much it is going to affect if the implied volatility changes. So the bid, this is number of shares. That means this is one lot. This is 1,000 means two lots. Clear, Arun? Okay. Similarly, you have everything on the put side. So call in the money, put out of the money, call out of the money, put in the money. And when you go down here, you see this total numbers. Total OI. Do you see this? Now when you add this, okay, 11,203,500 plus this 7,018,500. So the open interest is these many shares. These many shares people are interested in the options. So units, tens, hundred, 1.8 CR shares. Now when I divide this by the contract size, what is the contract size for Reliance? 500. So when I divide this by 500, I will get this as the total open interest. How much is that? 36,400. That's quite a lot, isn't it? And Nifty will be in millions. So is the option chain reading clear? 36,444 lots. Trade Tiger IV is average IV. These are individual IVs. Prasanna. रुको पुडुपेट बताऊंगा. Why are you in a hurry? I'm going to tell you all that. Again. घोड़े को क्या खिलाया भगा रहे हो आज? This is IV. Where do you see Prem IV in Options Oracle? Do you really see IV in Options Oracle? Deepa, change in OI is new contracts added or old contracts closed. The net sum of that is what is change in open interest today. Yes, IV gauge. IV gauge, IV is a average value. These are individual values. I will tell you how the average IV is calculated. Right now, do not talk about anything about this is for that contract. What is the particular implied volatility? That's it. LTP क्या है अरुण? Last traded price. No, significance is that's how our volatility analysis will be done, right? Prem. So those who do not have IV tool will refer to these values. Change in OI is 500 and minus 1500. Change in OI means 500 got added for that strike and minus 1500 means 3 lots got closed. People have closed 3 contracts. So the open interest has reduced by 1500 shares. And in the in whatever that is 500, it has increased. Is that clear, Suresh? अरे पुदुपेट में ओपन इंटरेस्ट में ऑप्शन चेन में क्या है एक्सप्लेन कर रहा हूं. अगर चाहिए होगा ना तो मैं बताऊंगा. ये जरूरी है. Do you not need to know what is change in open interest? This information is good to know. Suresh, IO is 5400. What are you writing? I have no idea. Oh, you're talking about this. Yeah, this is the total number of shares that are in open, the total number of shares in open interest. This is what is the live contract. जैसे कुछ लोगों ने buy किया है, कुछ लोगों क्या position hold कर रहे हैं. These are the open positions that you have in the market. Got it? Screen is frozen because I didn't do anything. Are we clear with this information? Now, what I want you to do is, I'm going to give you half an hour breakfast break. You go through this option chain on NSE website. See what information is provided. What is important, what is not important, leave it to me. I'll tell you. You will all know everything by tomorrow end of day. Right now, the idea is to understand this. So, if I say that volume is not important, so you will stop looking at volume. Kya? But you should at least understand that why this volume column is given here. Is everybody there or nobody there? Yes, ATM is always liquid. Okay, so let's break for breakfast. All of you exit the room and join back at 10:30. Ashish, some people do look at it, but it's this is very tricky. I'll tell you later on why. Maybe towards the end of day today, why these open interest and all that thing don't make sense. I mean, it's just trying to fit in too many things unnecessarily. If focus only on supply zones, don't focus on open interest. Supply zone will help you do everything. All right. So all of you exit now.